Good afternoon, everyone, to the third day of One Mega Event 2017. The last session of the day is Investment Realities in Real Estate. And the chair for the session is Mr. Jyoti Prakash Gadia, Managing Director, Resurgent India, India. May I now request Mr. Gadia to take over the session and introduce the speakers.
Good afternoon, everybody here. The topic is investment realities in real estate. So I think we have one of the finest panelists that we can even think of in terms of we have somebody from the academia, somebody coming from the overseas market and sharing his experiences that what is actually happening into the reality, into the real estate sector. And there is somebody who is heading the entire spectrum of that real estate association. So I'd like to invite one by one Mr. Tom, who is looking after the Deloitte office at Luxembourg, and he is going to speak something on the topic of green bond and how we can reduce the cost of fund for the real estate sector. Then I'm indebted to whatever that I know into the real estate sector to Mr. Sunil sir, and I would definitely try to address him by sir itself because he is now heading the school which is teaching the real estate students per se as such. I now welcome Mr. Sunil sir. Mr. Singh sir, I think so, with all the, he heads the real estate association called NAREDCO, and he represents the India's real estate industry to the government and other things. So he is going to speak and give us all the opinion about what is actually the reality into the real estate sector, sir. Welcome you all, and welcome all the dignitaries off the dais and on the dais. And what I am going to do, sir, I am going to just set some of the conceptual things for all the speakers to follow. That's some of the point that I think that was important for us to know, and some of the data points, and from where all the speakers can pick it up and try and see how we can address all those issues per se for that. I think so format that we can follow is that we can have at least 10 to 15 minutes after we can just talk about that. We can have 10 to 15 minutes of whatever is a viewpoint that every speaker can present. And thereafter we can make it much more interactive and much more into the one-to-one session per se as such, or whatever the flow that is going to talk about that. When we talk about from the real estate sector, we all talk about lot of things in terms of what exactly constitute of the real estate sector. So I'm just trying to confining my topic. It is just to set the boundary line correct. Like whenever we are playing any sports, so we exactly know what is the boundary area that we need to run through. ये 4 या 6 कहाँ तक हो सकते हैं, तो क्या बाउंड्री लाइन होनी चाहिए हमारे लिए. तो दिस इज व्हाट द रियल स्टेट सेक्टर व्हाट वी परसीव इज दैट इज कंसिस्ट ऑफ रेजिडेंशियल, कमर्शियल, रिटेल, हॉस्पिटैलिटी एंड ऑल्सो द SEZ. So these are basically the constituent from the real estate sector, and the residential space nearly constitute about the 80% of the Indian real estate market as on date per se as such. Now this is the summary of the real estate what we talk about. It is the 4th largest sector in terms of the FDI inflows. FDI inflows in this sector, it is expected to grow about USD 25 billion by financial year 22. Rapid urbanization, definitely we are seeing that there is lot of rapid urbanization happening, and the number of Indians living in the urban areas will increase from 434 million in 2015 to about 600 million in 2031. By 2028, India's real estate market is expected to increase by 7 times. So that's the potential of the market that we are speaking about. So that's what we are talking, that this is the real estate market into the gist as such. I would like everybody to concentrate on this dais and of things. This is an important slide that I would like to highlight, that what is the exact fate of the real estate 2 years before, 6 months before demonetization, and after. Now what is the fate of the real estate after the demonetization, and where are we flowing into that? Since I come from an investment banking background, so I am more likely to talk about numbers and finance. That's what my core expertise coming from. If I look at from the financing area, so there is definitely a shift in terms of the financing of the real estate for this last 1 year or so. And there is some sort of a basic reason behind that. This is how globally and any individual, how his saving is getting spent. This chart typically denotes that how an individual saving is getting spent. If you will see that in India, we typically stand out that from an Indian's perspective, 30% of our saving goes into the real estate sector. And into the equity market, we generally spend around 2 to 3% of our saving. Whereas the worldwide average is that into the equity market, it is generally around 25%. And in the real estate market, it is typically a global average of around 20%. Now, coming back to the cost of project and means of finance, if I speak about typically any of the real estate means of finance, if 100 rupees is the cost of the project, there are three means of finance. One is the promoter equity, which is typically in the range of 8 to 10%. Then there is institutional money which is coming, which is the banks, NBFC, or any sort of institutional money which comes into the project, which generally ranges around 10 to 15% of the project cost. So remaining approximately around 75 to 80% of the project cost, it is the customer advances that all the real estate project used to get dependent upon. Now, these two facts in mind, when I am trying to say that 30% of the Indian household saving gets into the real estate sector, and approximately 75% to 80% of the project cost is get funded by the customer advances. Now look at this slide. This is going to be alarming for us, and this is where the entire problem is occurring for the real estate sector. If you look at the Sensex versus real estate comparison of the return that we are getting, if it is a 10-year return, Sensex was approximately around 9%, whereas real estate was giving a 10% CAGR growth of 7.8%, which are more or less in line with both the asset class taken together. And then we Indians, coming from a conservative background, so we were much more inclined to invest into the real estate sector. But if you look at a 5-year CAGR ratio, which is that Sensex, which has upped its antenna in terms of return from 9% to 10.9%, so Sensex return has increased, whereas real estate return, which has decreased from 7.8% to 4.3%. If you look at last 2 years return into the real estate, the figures are very, very alarming in terms of comparison between the return and the comparison between the return of the Sensex and comparison between the return of the real estate. Last 6 months, it is being negative. So in terms of the real estate returns, it is negative 10%, whereas the Sensex, it is plus 22% in this last 6 months return. So this is the flow of the return coming back. And now come back to the old slides, that in case if we think that 30% of the consumer saving, if it is getting into the real estate sector, which constituted around 80% of the project cost. Imagine a scenario when approximately around 2 to 3% of the household savings get diverted from the real estate sector to the equity market or to any other asset class. That's where that 80% of the customer finance is getting hit. 80% of that customer finance getting hit, maybe if 1 or 2% of the household saving getting shifted, 1% of the household saving has an impact of around 5% into the project cost. So it means approximately, if I talk about that, only 3% of the household saving gets shifted from the real estate as an asset class to any other asset class. My 15% of the project funding, which was coming from the customer advance, that's planning goes haywire, and my project is midway. And then the multiplier effect starts tickling in and coming in. So how to address this issue and how we should try and take this issue off the ground running, sir. Now, government is trying by different policies in helping the real estate sector to prosper. They have eased in the housing finances by giving lot of interest subsidies to all the household buyers. That's again a fantastic scheme that we have. Housing for economically weaker sections, here government has done two basic initiatives. That affordable housing sector has been given an infrastructure status. Definitely we would like to understand from the expert that how it is going to ease the flow of money, whatever are the issues which we face for the real estate, how that affordable and infrastructure status, these two words combined together, and how this is going to impact the real estate sector in a bigger way. And also, government has also given an incentive for all the developers that in case if they are into the affordable housing sector, all the income tax benefit which will accrue to all the developer there. FDI. Government has allowed 100% FDI for townships and SRA projects. Provision for reduction in the minimum capitalization has also happened, that earlier it was approximately around 10 million, the the cap has now reduced to 5 million. The real estate scope of the market, which has increased in terms of REIT, which is coming in and other things, and also the land acquisition bill, which is also going to take a significant impact, which is going to make a significant impact into the real estate. So these are some of the government initiatives for helping the real estate sector prosper. I will just try to give you some of the numbers, and then we will leave it to all the experts on the dais that to take it forward from here. The total FDI in the construction development sector as a percentage of the India's total FDI, it is more or less remaining in the same range. This is what we are trying to say, that my institutional money with is 10 to 15% of the project cost, that has not changed. My equity contribution of 8 to 10% of the project cost, that has not changed, but it is where the customer advances or that customer shift of not pumping the money at the initial stages of the project, that's where it is taking the entire project for a hit. Now, this is a very, very important slide, and this is the second major observation for the real estate industry, sir. Sir, you will see that in 2007, the domestic investment, domestic private equity investment, we call it as a word private equity investment, it is stroke structured finance. So it is private equity stroke structured finance investment, which has happened from the domestic institutional money, which is the domestic sources of money, which was around 3,300 USD million in 2007. And it has come back to the same level in 2016 by investing around 3,400 crores, 3,400 million USD. So it means the domestic money has started coming into the real estate sector, which was earlier the flavor of the day in 2007. Then from 2007 onwards till 2015, it was basically the foreign money which was raising the toast of the money for the real estate sector. Now the trend we are started seeing that it is reversing. It is more institutional from an Indian market, the Indians which have started putting in more money into the real estate sector rather than the foreign money which has started coming into the real estate sector. So this is an important trend observation which is there. So how far this trend is going to continue, and how do you see this trend going forward into the market, sir? India is set to receive 4.2 billion new capital from global sources. So majority it has to come into the construction sector or into the base infrastructure sector. So that's where the whole real estate sector is going to get an impetus of the growth from. I think so. Builders sitting on an unsold inventory. I intentionally tried to put this slide together. I honestly feel, sir, all this real estate association need to do some act on this, sir, because what is happening, this unsold inventory, this word inventory, it is a misnomer, sir. In all this analysis, whatever do you do, because inventory is whenever any developer is launching a product or launching a project, we call it as an inventory. Sir, I think so. We should have two different types of inventory definition. One which is a finished goods inventory, one which is a work in process inventory. Sir, inventory, if you talk about, I was just talking to one of the good research houses, and when I think so, Praveen Jain was also there in that meeting, and then we asked them, sir, this is off the record, that what is the amount of flats which is ready inventory lying into the Gurgaon market? Only the number of flats, sir. The number was 946 flats only which was lying completed inventory. And if you talk about the numbers will say it is 46 months of inventory which is lying there. So I think so, because what is happening, it is giving lot of wrong pictures and wrong messaging into the market. I think so, sir, this messaging need to be corrected into the market at a grassroots level. We should try and see that word inventory of unsold inventory and the word inventory need to be redefined into the real estate sector, sir. Definitely, as you see that all the foreign money which was coming in and all the structured money which was coming in to real estate sector, which is getting into much more into a stabilized sector. If you look at the profitability index which is falling down, earlier we told that we are from an investment banking background, so we work with lot of real estate companies, and we have seen that any developer who was working with at least 8 or 10 projects, always within 2 to 3 years, one project used to be a jackpot project. last 6-7 years before, out of 8-10 project portfolio, one project definitely somehow or the other, the National Highway Road announced or something else announced, and one project turned out to be a jackpot project, the land which you have taken. So that's increased the overall portfolio for that builder at that point of time. Now as the market is getting matured, I think so that jackpot project, that one jackpot that used to get out in every 2 to 3 years down the line, that jackpot project, any of the builder is not getting that. So that's where the real estate profitability, and we think so, it has to be come with a construction or from an infrastructure company, the same profitability ratio, because infrastructure, the profitability ratio is approximately around 6 to 8%. Real estate profitability has now come down to 10 to 12%. So there should not be, I think so we are definitely now coming in line with the infrastructure companies as such. And as we have understood that now, since the customer advances figure is going down, so the vacuum has to be filled up by all the institutional money, which is like a structured finance. So that is why the interest cost of the project has gone up, and that is the major reason for all the profitability taking a hit together. So this is what the hit is all about. We just wanted to give you some sort of a number crunching and some sort of a data crunching to take it forward from here. Real estate was the second largest sector, both in terms of volume and value, with 18 deals worth approximately around $424 million, which has private equity investment, structured finance, which has happened in this sector. So apart from the technological sector, real estate sector is again one of the point that we are trying to emphasize, that real estate as a flavor, it has not lost its scene till now. Real estate is still the investors, we can find an investor for a good real estate project right now also. So there are takers for the real estate projects. And definitely so, because exits are also much more common for the real estate project, because there is a lot of refinancing opportunities, there is a lot of some investors buying out the earlier investors. So definitely that trend of secondary exits and also the primary exits, which can also be seen from the real estate sector across the board. This is the last slide, and then I will leave it for all the experts to follow, sir. Some of the problems that we face on the ground level is, sir, first issues which we face, it is the long-term tenure of money. Real estate sector, generally, all the investors, they generally have a typical mindset that they will try to fund between 2 to 3 years down the road. But if you talk about the life cycle of a project, from the land aggregation till the time I realize my money, the real estate project life cycle is approximately around 8 to 10 years. So we have to divide that life cycle of a project in 3 or 4 parts, which is pre-approval stage or till the land aggregation stage, then the pre-approval stage, then early construction period, then the late construction period, and then when the construction is completed, then we have a ready inventory. So these are the 5 typical stages of a real estate project life cycle. So we have to find every time a new investor for every type of cycle that project gets into it. So that's where the difficulty lies for a real estate developer, that once my stage of that project life cycle gets over, I have to give an exit to that investor, and then I have to find another investor as soon as I enter into the new phase of my life, as soon as that project enters a new phase. So can't we find an investor who is there with me from end to end, or how can I find an investor better that I get a long-term tenure of money? Since I have to do this entry and exit at every point of time, so that is why my cost of fund also becomes a challenge. Cost of raising and cost of fund both becomes a challenge at that point of time. And plus, since uncertainty involved, because the investor also knows that I am coming from year 0 to year 3, at the year 3 my loan will get refinanced. That's what he knows internally. But since there is no exit route which is defined at that point of time, so he adds that risk premium into his costing at the start of the project itself. And this again limits my availability of talking to a lot of lenders. How will I approach? Because of this problem that I have to change the investor at every life cycle of the project. So that's where the availability of funds gets an issue there. I have left this last issue for everybody to understand. So land financing, which was not to be considered, I think so with all the smart cities coming up, with all this everything, and also the affordable housing given an infrastructure status. RBI banned this land financing issue in 2007-8 because of an issue that he thought that in case if the banks start funding the land, there would be a bubble. After 7-8 years, when the market has matured to that extent, I think so this condition need to be revisited, and we need to try and see that whether this land funding issue can be addressed based on the smart cities, based on this affordable housing to infrastructure status, whether we can get a long-term funding, because since we have an infrastructure status right now. So these are some of the issues which we perceive as a realities into the real estate funding. So this is what we thought, that this is actually the realities, but we would like to understand from you all whether this is actually the reality or not, or there is something else that we need to understand from the market perspective, from the builder perspective. So can I invite sir from the Industrial Association to share your thought process, and then the academia, the industry, to how that you have seen from the real estate market, and then Tom about your international experience. So we can follow that. So welcome to you, sir. The dais is all yours. Thank you so much, sir, Mane, and all the audiences. Thank you for patient hearing.
All the people sitting at the back can really come in the front.
Distinguished panelists, ladies and gentlemen, I just want to start with that I have been hearing for ages that infrastructure and housing are the engine of economic growth. This has been true in the past, this is true today, and this will be true in future also. No country can think of progressing, developing, prospering without infrastructure, without the real estate, and investment in these two sectors therefore is very, very important. Of course, the real estate has passed through a bad phase. It was doing pretty well till about 2012. But after that, there has been a slowdown. And this slowdown is still continuing. There are many things which happened in between, which brought all these conditions together. We believe that the phase is over now. Slowly and slowly, the real estate is now recovering, and we will be moving forward. Of course, when there was a time when the real estate was really progressing more than 20%, 30% per annum, contributing 10% to the GDP. But there has been a time when that growth has been in negative also. Our personal understanding is that another year time probably will pass through this phase and a normal growth will take place. This is all dependent on the country, how the country is developing, but all indications are that the development is going in the right direction. The government is sincere and concerned about the growth of the infrastructure and real estate, because they understand that without these two sectors, they cannot sustain, because one of the basic requirements of the government is employment, and that cannot come without investing in the infrastructure and real estate sector. And you have seen in the last budget that there is substantial public investment which is coming through in the real estate sector and infrastructure sector, just to give a boost to the public investment or private investment. Our GDP has grown about 7.1% last year. We estimate that 7.5% will be growth this year, and probably next year it will be 7.8 to 8%. So once the GDP is growing, a large portion of the contribution has to come from the infrastructure and real estate sector. And this will make this sector to go faster. we need sustained infrastructure housing development for any country to grow, not only India. And any country, you have seen America in 2008 only, that only housing sector brought down the total growth of the country, and they took 4 to 5 years to recover that. So government realizes that they have to look after this industry and this sector, and they have to make necessary arrangements so that this is, and it is seen that this realization has come, and they have started, their concern is there for this sector, and they are started investments also. Investment has started coming to the sector. Indian real estate sector is the second largest employer. Today we need employment. That is the great concern of the government. And for that, I think that this sector, which can contribute the maximum, say about 35 million people are already employed in this sector, and they want this figure to go further up. For that, investment has to be increased, because this has a great potential for both multi-multiplier as well as the employment increase. As on date, probably our total value of the real estate market, market value is around 126 billion annually, which we expect that it will be around 180 billion by about 1920. What is contributing to the sector is the growing India. The agriculture used to be the main contributor to GDP. Agriculture used to be the main employer for the people, but today the things are changing. The agriculture contribution is reducing. Dependability for employment in agriculture is reducing. From 80% people living in villages, the number has gone down to anything around 60 to 65% now. And most of the people are now coming to cities. Cities are growing at about 2 to 2.5%, say around 3% now lately per decade in 10 years. And we have the population level which was very in two figures sometimes when we became independent. Now it is grown more than 10 times as on date. As far the city population is concerned, we have about 377 million people living in cities. This number is growing, and by about 2050 probably we expect half of the India will be living in towns and cities. Once half of the India lives in towns and cities, you can imagine that what will be the contribution of these cities and towns in the GDP of the country. At the moment is around 67%, and we believe that by about 40-45, this could be around anything around 75% that will come through from the cities' contribution to the GDP. So the things which are pushing the real estate and infrastructure are the economic growth which is taking place in the country, the fast urbanization which is taking place in the country. We have a very favorable demographic where maximum about 1/4 of the youth, world youth live in India, and we have the maximum people who are employable available in India. Of course, the skilling is the problem, for which a great attention is being paid through various skill development councils and all that, to make sure that trade skills are developed, people are made capable to do the right type of work. Families are becoming nuclear, so number of house requirements are increasing. In India, income per capita is rising. We are now say around $300 per annum, per capita income, $3,000 per annum, is expected to reach to around $8,000 by another 2020-21. Retail, health care, and travel, tourism, these are the areas which are growing very fast, and they are going to contribute maximum to the real estate development. Public investment which is taking place in Prime Minister Awas Yojana, Amrut, the Atal Mission for rural, for renovation of urban and transportation and transformation, smart cities, industrial and economic corridors. These are the areas which have the potential to make country grow faster and also provide all the necessary services and facilities required for the people to live in a better and lively condition. The government initiatives have been talked about in briefly, but I will just go into a little detail in this regard. We have seen the FDI norms lately has been modified, and there is no restriction on the FDI. There is no restriction of the land requirement that so many acres, so many square feet. There is no requirement of investment. Earlier it used to be $10 million. It was reduced to $5 million. Now it has been reduced to $0 million. So there is absolutely no restriction. Further, it has been provided that the investor can repatriate without any problem. He can, 3 years of course is the locking period. So if the locking period is over, he can go back easily. Earlier there used to be a problem. In case he has completed the basic infrastructure, road, water, sewerage, drainage, etc., at that stage he can repatriate. Also he can transfer from one non-resident to another non-resident without any problem. So things have been made pretty simple for the investment by the FDIs, and this I think has shown some result. Lately we find that the FDI investment, of course the demand is less at the moment because of new projects and all are not taking place. So keeping that in view, still the FDI investment in the country in this sector has improved. There have been many public-private partnerships in which new models are being experimented, whether it is road, it is transport, or port, housing. Everywhere, the government is interested in public-private partnership. We are practicing new public-private partnership with a view to give boost to the investment in this sector. Central Port Authority Act has been made in 2016, which has totally changed the definition and development pattern of the ports. Then there has been a National Investment and Infrastructure Fund, which has been created by the government, and there is some amount has already been deposited by the public money in previous financial years, which is helping these infrastructures to develop. Real Estate Regulation and Development Bill. This is a landmark bill which has come in the real estate sector. And the sector which was totally unregulated in the past has to be regulated by a regulatory authority. This has created a big problem in the development because of the initial stages and all that. But I am sure that once we go through, probably after some time, we will have a better business environment in real estate sector, more transparency in the business in the real estate sector than what it was prevailing earlier. So this real estate bill, I think I have worked on this bill for last 10 years, and there was no political will to pass this particular legislation in the parliament. Subsequently, I think it's glad that under public pressure this bill has come, and this is going to transform the sector in a much better way, and this will become a better investment options now, real estate sector. Of course, this has been notified with effect from 1st of May, and the registrations are already in progress. Rules also have been made by many states. Many states are still in the process of making the rules and appointing the regulatory authority. The process is on, and by 31st July, which is the last date, 3 months' time, by which everybody has to register all the projects, whether it is new or ongoing, I think the things will be much clearer. Goods and services tax is another important landmark reform in the whole country, more so in the real estate sector, because there are too many taxations in the real estate sector. And with this, we believe that this will be pretty simplified tax structure which will come for the real estate sector, and it will give a great boost. I have been talked about that lately we have got an infrastructure status for the real estate sector. I have personally been pursuing it for last many years with the government, finance ministry, went right up to the prime minister also. But for some reason or the other, it has not been coming through. Yet, the entire real estate has not been given infrastructure status. Only the affordable housing up to 60 square meter carpet area. That is what has got the status of real estate sector. The government says, yes, I think we have made a beginning, and we will see the rest of it later. So I quite hope that this particular, when we get a total infrastructure status for the entire industry or entire sector, I think that will be a much better things, because that will make things better, and it will provide incentive to both developers as well as investors. We have seen that the last budget has also provided us other tax reforms in which it has provided that long-term capital gain period has been reduced from 3 years to 2 years. So your money can be deployed within 2 years, which you used to wait for 3 years' time. So that is another important thing which has happened in the last budget. We have also in capital, in joint venture, the taxation clock will start only after the project has started. Project has been completed, which used to be that the person who is passing on the land, parcel of land for development to the developer, he had to pay on the notional income gain tax. So that thing has been sorted out. That was also being contested for a long time. And developers were being harassed for their properties which were in transit. That is, once the project has been completed and the property has not been sold out to the beneficiaries, those properties used to attract the rental income, deemed rental income. So that the government has now agreed that period will start only after 1 year from the date the project has been completed. So that is another good thing which has happened. Demonetization of the currency notes is very good thing which has happened for the real estate sector, because this sector is one known for the black money, and the black money for the time being has been wiped out from the real estate sector. And you see the pressure of this which the developer or even buyers are facing these days. One has to go through the white money, all the investments, purchases have to be in white. Of course, people are competent to do it, create the black money again, but I think it will take time, and the things are becoming difficult. Government is also watchful. So this may not happen, and that will be a good thing for the real estate sector. once the black money is totally wiped out and the entire business in white. Interest rates, which were more than 10%, has now come down to 8.35%. So this is a very good thing which has happened. We believe that it may come down further. And this is the right time now for the people to invest in real estate sector, especially those people who want to own a house. I think right time to buy a house. Of course, you have to see that you invest at an appropriate place. Developers are under strain, as has been brought out. There's a lot of unsold inventories, which may last for about a year or so. But nevertheless, I think this is the right time. Those prices have also come down 10-20% as the market reporting. And we feel that things are better to invest in the real estate market, and one can buy a house now. Affordable housing, its definition has been enlarged. I think you heard the Prime Minister on the New Year Eve coming out and saying he has added a middle income 1 and 2 group, which provides interest subsidy to 4 and 3%. Earlier, the interest subsidy under the PMAY, Prime Minister Awas Yojana, available is for 30 square meter to 60 square meter carpet area, flats or house. That is 6.5%. The income limit is 3 lakhs for EWS and 6 lakhs for LIG. These two categories will get 6.5% interest subsidy. Now you think that in 8.35, 6.5% goes from the government pocket. So what is the remaining? There is hardly anything, it is almost free. So this is for those people who do not have, and those who are the low income group people. I think this is a big assistance given by the government. Even for middle income group, those who have the income up to 12 lakhs can get a subsidy of 4% if they take a loan and buy a house. Likewise, those who have income of 18 lakhs per annum, they can get a subsidy of 3%. So these are very good incentives provided by the government for all class from EWS to middle income group people. And the area is also increased. It is not, earlier it used to be 30 square meter and 60 square meter, 30 square meter for EWS and 60 square meter for LIG. Now 2 additional categories have been added, 90 square meter and 110 square meters. 90 square meter is for those people who are income group 12 lakhs, income level 10 lakhs, and 110 square meter is for those who are income level 18 lakhs. So carpet area 110 square feet, 100 square meter will translate into a house, a flat 14 to 1500 square feet, which is a good flat, a good 3-bedroom flat. So this is a great job done by the government, and it is very useful to the society, to the people, right from the EWS to MIG, who can invest in house and own a house. What is the emerging trend now is that affordable housing, there is a lot of demand for affordable housing. I think 95% demand is in this sector, affordable housing sector. And we have a great scheme of Prime Minister Awas Yojana, where the government is trying to invest about $130 billion in this particular scheme. Likewise, we have got a smart city where about $2 trillion is expected to be invested in next about 20 years' time. Then urban redevelopment. There is all urban infrastructure redevelopment plan under the AMRUT, that is the Atal mission for rejuvenation, urban transformation. This is a scheme under which the existing infrastructure have to be relayed, to be reinvented and made modern and new, so that whether it is a transport system, it is a railways, buses, your water supply, electric supply, drainage, sewage, solid waste management, all these things can be transformed and made more economical as well as modern. So this is investment is also going into this infrastructure development. Then we have the infrastructure linked real estate development, where you are seeing the airport, your cities are coming up. A transit oriented development is taking place, and industrial economic corridors, where we talk about the Delhi, Mumbai, or Amritsar, Kolkata. We talk about Kolkata, Chennai, Bangalore, Pune. All these areas are under development, and we find that this is providing a great opportunity for infrastructure as well as the new townships which are going to come up. So this is all the government initiatives, and what is the scope and future of the real estate sector, which is in the next probably few years is going to gain its momentum, and probably the investment is plenty of investment is going to come through. The process of investment, your procedure of investment has been made pretty simple. Government is also working now on the approval procedures to make the approval procedure simpler. We have been seeing that there are about 40, 50 approvals required before starting a project, but now I think most of things are being combined. A lot has happened. In fact, truly speaking, your environmental clearances, now they are mostly given to the local bodies, that local bodies will approve these environmental clearance. They will put it in their bylaws, and once you follow those bylaws, that is automatically deemed approved. So likewise, airport authority is now color-coded maps they have prepared, and you have to just follow the map, and you don't have to go to anybody for approval. The local authority will see with respect to the map where it falls, what you are making, what is the height, what area you are using, and they will clear it. So those things, similarly your land of the defense and other things, those are also being covered. Central government, most of the departments have centralized their approvals, but in states it is taking time. Some states have come out with the automatic building plan approval procedure. I think a lot many states, not some, a lot many states have adopted it. Probably maybe another few years' time, it will be across the country, across the board. Prime Minister is personally very interested, ease of doing business, because this is one thing which is killing India. Anybody, any foreign investor is looking at it that doing business in India is difficult. This is a general perception. To remove this perception, ease of doing business is a great emphasis of the government these days. And everybody is, I think, all departments, government and all, they're all working on it. I'm sure that sometimes, maybe about another few days or few months, these things will come through. Then I think he talked about financing land by the banks. Those things are also likely to come through. I think work is on. I think the RBI has more or less agreed, but let us see if it gets implemented. Thank you.
Thank you. Request whether you can use the dais or you can sit here.
Well, if you guys don't mind, I'll be happy sitting where I am.
Absolutely.
I think a lot of things have been covered both by Jyoti and Mr. Singh. So I will just give an overview of what my feeling about real estate, and I think everybody wants to know what real estate, what next, and I think that is the question that is there in everybody's mind. So I think first of all, as Jyoti said, that there has been a lot of budgetary incentive, and this is the first time we've seen that actually the government has done something positive for this industry. We've been seeing that successive governments, successive years, budget was a big disappointment because nobody really thought about real estate. And I think people are still not thinking about real estate. It is all about housing. So so if you read the fine print, it is all about affordable housing, subsidy in housing, and real estate, though by volume is 85% of what real estate is in residential. But again, there is a huge amount of commercial space which is still getting constructed. There is a huge amount of retail space demand, the right kind of retail space demand. There is one sector which I just wanted to highlight, which is the warehousing sector. There are a lot of incentives which have been given to infrastructure, and I think a lot of real estate companies are now realizing that infrastructure logistics is becoming an increasingly important play in their portfolio. So I think real estate has to be understood in its whole sense of residential, commercial, retail, logistics, industrial estates, etc. And I think while we've addressed to some extent housing, there are a lot of challenges which still remain in the other sectors. And one of the things that I like to highlight is GST. Now GST is coming in a big way. We are all waiting for it to be launched on July 1, which I think will happen, if not in July, maybe August. But I think we are on the cusp of a regime where there is going to be a single point tax across the country. What will this mean for real estate? First of all, there are going to be larger warehouses. Today, if I am a dealer in Delhi, I have 3 warehouses across Delhi because different taxation in different states. Therefore, I cannot combine and consolidate one large warehouse because my taxation structures don't allow me to do that. Tomorrow what's going to happen is, because my GST is going to be same, I'm going to have a very large warehouse, and then I'm going to not have the cost of 3 warehouses in, let's say, a region like Delhi or anywhere across the country. I may want to work on a hub and spoke model, and this is what I think is a big time development in real estate. So apart from housing, the concessions given, etc., I think that is one part of the story, but GST is going to have a big impact on the logistics and warehousing sector. If you look at one of the large investors, ascenders in the country, I was talking to the CEO, Sanjay, and Sanjay said that the latest thing that we've done is we've also entered logistics as a segment. So, when Ascenders, which is a very global investor and has invested in large commercial projects, they are saying for the first time in India, we're also thinking of a small residential but large focus on logistics and warehouse. So I think when you look at asset classes, we are going to see much more diverse asset class play in real estate than what traditionally has been, happening. The second point is that there's always a debate on income versus end use. So I've always been a big proponent of the fact that investment in real estate is very different from end use, and one should not mix the two. So I have seen always this debate, I want to buy a house, but I want it as an investment too. Your house which you buy for your living has to match your needs, and it doesn't matter whether it is going to appreciate or not. It may matter to some, but it should not be a depreciating asset, but if you're happy with the location and you want to live around it, probably dynamics of your buying has to be very different. And if you try and mix the two, that is where the confusion happens. So when you think about investment, think like an investor. So when Jyoti said that there is 30% money in residential real estate, and there is only 2% of allocation of India in private equity, as an investor, I would never invest in real estate in this market. Why should I invest in an asset class which is over-invested, which will have a falling return over a next number of years? I'd rather go to equities, and if you see what has happened in April, 20% rise in equities. So I think if I'm a real estate player, I would go and identify shares in real estate which will give me growth. So you have seen, this is again some kind of a working that we did, that housing finance companies, if you look at the play in housing finance company stocks, they have really given a lot of return to investors. Average growth rate of a housing finance company which has done reasonably well is anywhere above 20%, and that too in this market where the general market prices have fallen. So if I'm an investor, I will always find smart ways to invest in, not really rely on a physical asset, buy physical asset, wait for the markets to turn tide. And as Jyoti said, if I'm a large investor, out of 10 investments, 1 gives me a jackpot. That's the nature of asset class. If I'm a hotel business, 1 hotel makes me money, 9 I run because I want to give options to my guest, and he can probably go to different parts of the world and at least have a hotel to stay in which has a similar spec. But not all hotels make money. Similarly, not all real estate investments will make you money. If a road comes in, I hit a jackpot. If the road doesn't come in, I probably am at that 4% rate. So I think what happened in the last 10 years, 15 years in this country was unprecedented, was not sustainable. People, I used to talk to my friends. I remember 5 years ago, I went to some place and there was this guy who was willing to sell me something. I said, what is the rate of growth of your organization? And he was a very large real estate distributor. He said, we were like 5 people 5 years back, we are now 500 people. and we are all selling homes. I said, what I predict is next year you will be probably less than 100. And he was not too happy. He was very unhappy with my answer. He said, I'm guaranteeing you this money. I said, what does your guarantee mean? Your guarantee means nothing to me, because if you bring a bank guarantee, there's a guarantee. Otherwise, your guarantee means nothing to me. And believe you me, that company today has only 40 people. And I'm talking about 1.5 years. And he's one of the largest broking houses in this country. So, people have had tremendous growth. There were I went to a gold seller. He's called Manohar Lal Jewelers. I will name him. If you know him, then tell me that I said it. I don't mind. Point is, you went to his shop and he said gold has risen so much, and therefore gold has beaten every investment class. So these are all cyclic commodities. Real estate is also cyclic commodity. So if you bought gold in 95, you bought it at 4,000 rupees. You bought gold in 2002, 2003, you still bought it at 7,000 rupees because gold hadn't moved. You bought it in 2008-9, it was 20,000 rupees, now it's 30,000 rupees. But in the short span of 2-3 years, you saw such a big rise that everybody was claiming gold is the best investment form of all class, and therefore there were pundits who were selling gold. So, a lot of people just keep selling what is in the... So today the flavor is, if you go to any of these wealth houses, they will say equity is the flavor, which I agree. But then don't expect equities to perform 20% in a month, or 20-30% growth will not be in equities. The only thing pushing is liquidity, because there's a lot of money now in liquidity. The 16, 17 PE ratios have gone up to 20-22, and that is the new normal. This is what the market is saying. Wait for some time. If the market corrects itself, there will be a lot of people who will probably run away. But the fact is that you still have so much liquidity in the market that the downside is limited. So I wouldn't say that, please don't invest in asset classes or anything blindly. There are real estate opportunities even in this market. There will always be people who will be able to identify those opportunities in growing areas. There are small towns where there is hardly any infrastructure. If you have a good colony done by a developer who may not be one of the bigger developers, he is given adequate infrastructure, those asset classes are in great demand. But it is very difficult to go from here to Agra or to some place and then try and maintain a small house, because it is just too cumbersome. So I think asset class wise, real estate is fairly rich. It is still going to attract a lot of investments, but they are going to be selective. They are going to be much more analysis driven than what has been there in the past. Also, I would like to point out that there's this new thing called REITs which is coming up. So there will be a lot of investors who will also buy into REITs, which will then use this money to buy assets which have rental yields. So I think this is something which is new for this country, but globally, REITs are a very consistent source of income, and I think that we are all waiting. We have seen the first InvIT in the country, which is the Infrastructure Trust, which is IRB. I shouldn't be saying this, but I was discussing with Jyoti that even a share which was giving 5-6% returns, even that was subscribed 6 times. So that can tell you the madness in which we are. So you will see some REITs hit the market. I'm sure REITs will make a seriously good return as compared to a fixed income product. You can use that, and probably some of them which will be invested into better assets will give you some appreciation. So I think let's wait how REITs perform, but I'm fairly excited that is one source of capital, because today banks lend, and then as Jyoti said, you have to, at every stage get one investor whose risk appetite is lower. So first you go for land financing, risk appetite is the highest, then the approvals are done, he exits, the new guy comes in, who's a NBFC, then NBFC exits, the bank comes in, and obviously the end product is a buyer who's sold. So I think what is happening is, that is not bad for the economy. What is bad is that there is seriously no long-term investor, and I think we are far away from our provident funds investing into such asset classes. But once REIT comes in, you would ultimately have investors who would invest into long-term through REITs, and they would not have the risk appetite which the other people will have. The second thing that's happening on the land financing, Jyoti, you brought out the issue of land financing. My view is that land is not being bought and sold today. What is happening is bigger developers are going for a joint venture, joint development, because land, it's very difficult for people to put money in land and see anything is going to happen. So people go, they do a joint development agreement with a landowner, and the landowner gives money, land, and the construction firm brings its abilities to construct, and that is how a lot of ventures are being funded. And I think that is going to be the new norm. Nobody is going to buy land anymore. People who bought land can sit on the land, they can go to a developer, they can kind of collaborate on that development, and then I think projects are going to happen. So, stories when people were collecting land to build asset valuation or valuation of these companies are all gone. I remember in 2006-7 when all these IPOs were coming, people used to see how much land this developer has. And we used to find it very funny because if you have a lot of land, which means most of your assets are blocked into that parcel of land which is going to give productivity 10 years from now. But such was the market. DLF was sold for 535 rupees, it went to 1,000 rupees. Why? Because there's so much land. And the story was that they will construct 6 million square feet every year. DLF in 2006 had done only 6 million square feet. So there were a lot of stories which were floating around. I think what's happened now is that people have realized what is possible to do, what's not possible to do. So I think market itself has become much more mature, and gone are the days when you can expect a bombastic kind of a return from this industry. It never gave, except in pockets which are South Mumbai or South Delhi, where the prices rose like crazy over the last so many years. But I thought, real estate was never in competition with in stock market. Stock market is far more riskier a product. I would say that stock market has also, the story is nice, 9%, 10% today, but the investor who went in 2001 till 2010, the story was not so good. For those 10 years, there were headlines in newspapers being made that, the stock market is not even given as much return as a bank savings return. So please realize that investment is a cyclical business. You need to be aware what asset class you are investing in, at what stage are you investing in, and if you are not so savvy with financial numbers, have a good wealth advisor who will advise you. And Jyoti is going to very soon open a wealth management firm, and that firm is going to advise you very well how to invest. So I think addressing the land, buying issue, you will see collaborations. Seeing that there are different players at different risk levels is a very good thing. So you have private equity, you have banks, you have NBFCs, all with different risk appetites. Customer is not going to advance a lot of money now. So that's what is absolutely the truth, that if people were making projects of $100, people were saying, I will put in 10 bank will lend, 80, customer will lend. Now what's going to happen is you are going to put much more than 10. Your equity requirement will be 20, 30, and there will be a private equity fund with you who will make sure that your governance is strong. Then you're going to have banks who are going to have the rest of the money. And by the way, customer is going to put very little money. What does it mean? Anybody intelligent enough to now see where money can be made? How can you make money? By investing in firms. So when Jyoti lists his firm, invest in his money. When a private equity fund, you see a lot of money being made in NBFC and bank stocks, which are already, pretty much the shares have gone up. But I see a lot of business for banks. I see a lot of banks who will come in, who will fund these developers, who are good developers, large developers, and ultimately that market size will increase. Today what's happening? 10-15% is what NBFCs and banks are investing. Tomorrow they're going to be 70% money is going to. So you need at least 3 to 4 times much more lending to this. So investment banks who will get this money to the developer, all banks which will start lending, that's where the market size is going to be huge. Valuation business is going to be huge in this country because there is going to be a lot of valuations being done. There are going to be a lot of, caution because governance is coming. So don't think investment in real estate directly is going to help you. Think all around and see where money can be made. So I always say this, and I think it's a very cliche now, that when gold rush was there in America, people who actually made money were not people who discovered gold. People who made shovels and people who actually supplied shovels actually made more money than the gold hunters because there was such a lot of demand for shovels. So never as an investor try and confuse yourself. Investment is one thing, asset class is another thing, and so long you have that differentiation very clear in your head, you're never going to lose money. Because I want my house and people calculate the value of a house to see how wealthy am I. But the fact is you are still going to pay house tax. You're still going to be spending money for its repairs. Your wife is still going to ask you 10 years ke baad mera kitchen change kar do. So it's a liability. You're going to be constantly spending money on an asset which we think has made you money, but you're never rich by owning an asset and then keep investing money into it. At least that's not what I know as an asset. So asset, what you live in is one thing, asset which you own for investments. I think that clarity should be definitely there. On the, and this is my last thing is, there's this talk of inventory versus what is available. So absolutely right. There's very little inventory which is left. What is happening now is there are a lot of bulk deals which are available, a lot of discounts which are available, and one can now think of a good end use. If you look at all the office commercial deals that are happening, a lot of corporates that have surplus cash have started to buy assets. If you look at Bandra Kurla, some but he bought a 1600 crore deal. Deals are all over. You'll find between 200 crores to 1000 crores. A lot of corporates sitting on cash has started to buy these commercial assets because I think it's a good time to invest back, and at least have a stable rental, which you can predict that this is my cost of money, and therefore I don't have to pay this rental again and again. And I think that is where the market is going to move. People are going to buy real estate for end use only. Investment will be through other channels as well. On the front that what is going to be the future of real estate and how we are placed today versus what is going to happen tomorrow, let me tell you, we have hardly begun in this country. This country mein abhi, we haven't seen real estate. We are very, very nascent. It's only 10 years of history where we've started to get money. We've started to see some good buildings. We haven't seen a good building. If you ask me, how many residential complexes can you go and feel happy about in this entire India? There'll be probably 5. No more than 5 or 6 people who know how to do luxury housing. No more than 20 guys who would have done a good mid-income housing. No more than, I think 1 or 2 guys would have done good affordable housing project. That is all what this country has seen. Try and find out what is a good building, commercial building. One can be very happy when you go to Gurgaon and see those fancy buildings. But let me tell you, international standards of buildings versus what we hear is, I have yet to see more than 5 buildings in this country which adhere to international standards. One Heinz Center, one Horizon Center, that's an international building. You go to Bombay, you see FIFC, which is world-class building. You go to Hyderabad, you see Wave Rock is one building. I can count 5 buildings. That's all. ITPL, yes, a good building. But none of the buildings are anywhere close to what international buildings are. So we have only started to begin, and retail malls, I have yet to see more than 3 or 4 malls that do more than 1500 rupees per square foot kind of a sale in this country. So there are no international malls, there are no international commercial projects, there are hardly any residential buildings. And today what's going to happen is people are going to demand quality and people have to deliver quality. We have not seen international level contracting firms in this country. There are hardly any. Leighton, and you will be surprised, I had a school of real estate which has 1150 kids. We place them all every year. Even in this market, my guys who did facilities management, there were 8 brave students who came. There were 8 firms willing to hire all 8 of them. This is the reality of the market. You can see what kind of growth you will see in facilities management. A lot of people don't realize, but you can produce this asset, you can reconstruct this asset, but somebody has to maintain it. There has to be a guy who has to maintain the air conditioning in this hall. There is somebody who takes care of the maintenance, and maintenance, by the way, is 80% of the value that you capture through the life cycle of the project. So facilities management is a huge opportunity in real estate, huge. We have not even touched the iceberg cut tip. As far as I am concerned, real estate has a huge amount of future in this country. People who will think in investment terms may or may not. People who will see cycles and will get afraid, good luck to them. But I still believe that future of real estate in this country is definitely far more than what it has seen. You've just seen what markets could be when they get money. I still see that if you read the last quarter, the sales of residential has picked up by 8% or 21%. 21% over the last 2 quarters, the housing sales have started picking up. So I think at some stage, you will see this market more mature. Developers who are fly-by-night operators perish. Banks will grow. You will see larger developers become even larger. People investing in land are going to be much more cautious because they are taking the risk, and therefore no longer will you see fancy values. That's what, you saw that people in the peripheries of city actually made super money without really doing any work. I think that time is going to go. So you're going to enter into an industry which is giving you 10-12% return, which is a decent return to have. If IT gives you 15%, and look at what has happened to IT. I don't know how many of you are aware, half of India's IT workforce is going to be redundant in the next 4 years. In 4 years, those people working in IT industry, 6 million people, 3 million are going to be redundant because of cloud computing, artificial intelligence, machine learning, and every industry has gone through this. Textile has gone through this, steel has gone through this, IT is going through this, real estate will also go through it. But I think the moment you have a regulator like RERA coming in, you will see growth in the industry. You will see that when TERI was there in telecom, what happened after telecom regulation happened? You see much bigger firms, you see much more reduced call rates. Today, everybody has a phone, you get paid 300-400 rupees a month, which is what, $10, less than $7 a month. You pay $7 a month, you talk as much as you want. That's the scheme that I think everybody has now on phone. You know, $7 for a month, talk anywhere in this country, no STD charges, nothing. That's what you've come to, and I think this is going to fall to $5 or less. You're going to see that, you know, probably you're going to see $5 or less. And you now have a player, you pay only for data, I will give you voice free, which is Jio. So you're going to see all this happening in real estate also. People who are used to making 30-40% margins will have to work harder to make 10-12% margins, which is, I think, is absolutely the realistic level of what somebody should make. You know, including debt. Unleveraged, I still think real estate will give you 15, 17, 18% returns. Unleveraged returns, which is very good in any economy. I think Luxembourg, I don't know what your returns are going to be, but you know, post-tax unleveraged returns of 15% is what I can still see in real estate projects which are good. So on that note, I think I'm not so discouraged. In fact, I'm very happy. You know, this whole theory about real estate being in gloom, doom, boom kind of a thing, I don't accept. People are still going to need houses. People are still going to need better offices, probably different kind of offices, which are ready to plug and play, which facilitate hot desking, which are enabled with new technological features, so that, you know, you do not have to, and co-working is coming up in a big space. I don't know how many of you have seen, but I think co-working is going to be the future. People are going to work as freelancers. People are not going to work out of their homes. They're going to discover, because people like meeting each other, you know, and that is where I think I attended 2 or 3 years ago a conference in New York, and they were talking of millennials trying to reduce home sizes, but they wanted to have meetup spaces. Today, if I want to have fun with 20 of my friends, where do I go? I can't invite them to my home because home sizes have become very small. So I have a 500-700 square feet home, 20 guys can't fit in, can barely fit in. I can't go to a restaurant, because a restaurant you have to be mannered. You can't be making noises, and you have only food as a attraction. But do we have a space today where I can invite 20 friends and can be happy with them and I have a space? The answer is absolutely no. So today what you have is a library which is changing. In my school, the library in my university today has these cluster rooms, 8, 10, 20. And we said there are going to be huddle spaces. People are not going to study like they used to study with a book. They are going to be doing collaborative projects, and therefore you have a huge amount of space dedicated to that kind of use. So you're going to see newer forms of, you know, asset classes. You're going to see newer forms of real estate emerging. And I don't know, you guys will be shocked, but if somebody says to me the right answer, I'll probably, you know, treat him to some, you know, something today. Which asset class made the maximum return in USA? Can you, there are REITs, so REITs have parking, they have a lot of asset classes, hospitals, schools, etc. But which asset class in US last 2 years made 16.5 to 18% returns for investors in USA? In USA, jails. Because there were investors who were investing in jails, because government doesn't have the money to make jails. There are more and more people committing crimes in that country. The government invests much more money than education in US to keep their prisoners in the jail, and so jail was the biggest opportunity. So, you know, don't think real estate is, you know, just about a home and this. Even jails is real estate. That's like a hotel, but you have a cap. So you have an assured guest, you have an assured government, you know, so government will say, please make a jail, you know, I'm sending you 300 convicts, please take care of them. These are the standard SLOs. If you do that, we'll give you, by the way, so much money. So this is also, I mean, this is like on the lighter side, but I'm serious. I mean, this is a research done by, you know, San Diego University. We are having a collaboration with them, and when this professor came, he said, you know, the maximum asset class that gave return was actually jail. So real estate is going to see huge amount of change, and I think I'm so excited when I go to, you know, newer formats in US, when I see them, I see that housing again is changing shape. And if builders don't understand how newer generation is going to live, I think they're going to be in a rude state of shock. Because today in New York, people are not building those big apartments. They're building 2-bedroom apartments, 700-800 square feet, and that is what millennials want to live out of. They have community kitchens, they have laundromat, they have all the facilities in the building and a place where they can go out and party in the same complex. And housewives are no longer willing to go to suburban America, drive 30 miles of the city with a big car and drive that 2-3 times in the traffic. People are going to live off city centers in a city which is going to be smart, where communication, where rich is going to travel in metros. We haven't seen rich traveling in, we always travel in cars, but I think you go to one of these smart cities, rich travel in metros because it's far more convenient to catch a metro and go somewhere rather than try and maintain your car and a driver. I mean, 10 years back when I went to London, my company said this car is going to arrive. So I went to the car, got out of the office. This guy said, who's going to pay me? So I said, what? I thought it was a company car with a driver. He said, no, that's not the case. So it's a taxi, you pay me £7. So I paid him £7, went to the office, and I almost shouted at my guy. I said, what is this? You don't even have a car? And he said, we don't need it. Every time you want to go somewhere, here is a phone, and you call the guy and that's it. Why do you need a car? We don't need a car. We don't need to pay that driver, and it works more efficient. And I think that's what Ola and Uber are going to do. So go on our garages. We probably are the last generation which is still going to have fancy as a car, but I think please realize the world is changing. We have to change real estate too. We've not changed construction. We've not changed the way we've designed our products. Hire, if all developer friends of mine say who should I hire? I said you must either hire a person or have an advisor who's basically a sociologist, because he's going to tell you what kind of products to design. Because if you don't even know what your customer wants, and as real estate guys, as finance guys, we don't know what the customer wants, they are going to tell you what kind of house is designed. And I think last year, Tishman went to the campus of Harvard not looking for real estate finance guys. They went looking for guys who did sociology in built environment. And that is what was the highest job, campus job, because they said, if we don't know what the customer wants and we can't design our stuff according to what use are we doing. So, designs are changing at that level. And I think unless we start to transact in a different manner, start realizing technologies here, people are wanting different products, we are going to die a slow death. So there are a few conscientious developers, there are a few conscientious professionals who will do the right thing, the right manner, and I think you will see them making a lot more money than what they were used to making earlier, and there are others who will perish on the way. That's where, I think real estate is headed. Thank you.
Thanks, sir. Tom, just a humble request. We are really running out of time. If you can just squeeze it. Absolutely. Thank you, Tom. We'll just speak. Thank you. The organizer will be happy with me.
Yes, so I really only have 7 minutes, I think. So just to tell you, well, I'm from Luxembourg. For those who don't know Luxembourg, I put it on the map. Well, in fact, Luxembourg is very small, so it's there where the bullet is. It's below. You don't see it. It's too small, the country. So, however, it is a quite big financial center, one of the most important in Luxembourg, in the world, sorry. And so we have a lot of experience also in real estate financing, and that's what I'm going to talk about. We have similarities with India and differences. We have 580,000 people, you have 1.3 billion. So we have, however, everything which is ITC, which is startups, all this very much research and so on for our side. So that makes us probably a bit more common what we have in common. So what I wanted to talk about is mainly about green bonds. I put green bonds, and we discussed beforehand. We could also call it an impact bonds. So what is a green bond? A green bond is a fixed income instrument that is issued to raise capital through capital markets. And if we call it green bonds or climate bond, it is mainly in everything that will have a relation to improve our environment, right? It can be in energy, it can be in infrastructure, it can be in buildings. So that's where we are in the real estate. You have transport and ICT. So everything which is digitalization and just makes us more efficient, using less energy, for example, less carbon footprint will be included. The thing is that 2007, the first green bond was listed in Luxembourg, the first green bond worldwide. And you see the market was quite slowly developing until 2013 to go to 500 billion in US dollars in 2016. So it is really a market that is growing at the moment in a very important way. Yes, in Europe we have lots of them. So there are a lot of issues done by banks and companies in Europe. India we have like 17 billion US dollars, so it is a good start. But you will see that there's much more of funding needed. In fact, the IFC made an analysis, and they said that for until up to 2030 in India, total climate smart investment potential exists for 2.1 trillion US dollars, of which 1.4 trillion dollars are related to buildings. And in the short term until 2020, it's about 90 billion US dollars that are needed for smart housing in smart cities, well, mainly green. So I said before, Luxembourg has a long experience. 2007 it was its first bond, and Luxembourg is the only stock exchange where there's a special platform for this kind of investments. And as you can see, our experience is quite good, as we have been voted best exchange at the 2017 Green Bond Awards. What are our strengths? I think it's mainly, as I said, we are in the financial sector, and the experience is very good and very long, and I think that is very important. We said it also before. It needs to be quality, it needs to be structured. Also, if you want to finance things in India through India, it is very important. Luxembourg can list 50 different currencies, mainly 54, which includes also the Indian rupee. And then it's all about efficiency, because it's going very fast. Other countries who do not have the experience, not the same regulations, it will be much slower. And finally, the investments need to be safe. And that's done because we can control if it's green bonds or not. So we were discussing what can be, how can we define a green bond. I put here two examples, but you have the 17 UN sustainability goals. If you go into that direction, you will be in. So we said that, for example, the European Investment Bank issues most of the green bonds in Luxembourg. And in fact, they had for one fund or one obligation, one bond for affordable housing. And that's what I understand from the panel, that's something that is really needed here also in India. Finally, well, more or less coming to an end, you need to be sure, in fact, that your green bond or your impact bond is really an impact bond or a green bond and nothing else. That's why there are principles that exist as the green bond principles or the climate bonds initiative principles that are used to certify these bonds, meaning that there will be a certified auditor, an independent person that will certify that the bond in that respect is green or is an impact. There are, however, barriers. That's mainly if the project is not in the scope, that's what we said. It is also if the project and the issuers are not bankable. And I think that is the main problem usually in this kind of project, that this project or the potential issuer has not the structure to be able to really issue a bond. And so it will be very difficult to meet the potential of 1.4 billion, trillion US dollar in 2020, and to find appropriate issuers. Finally, yes, there is a huge amount of an administrative burden, because you need to comply with all these regulations that exist in any market, in any European market, but also in Luxembourg. And so if you cannot handle that, you will never get to issue your bonds and to finance, in fact, the smart housing or the affordable housing in India or wherever it is needed. So I think I did even almost better than 7 minutes. And if there will be questions, you can always get back to me. Thank you.
Thanks, Tom. We'll try and see that how many Indian companies can take the advantage of the green bond and try and see that how we can leverage about this type of, because of the smart city and other things. I think there is a huge opportunity for the firm like you, and we would definitely like to have some sort of a workshop session where I think it can be half a day or at least a full day session where we can run down through the entire process of this green bond and other things. I think so, Anilji, with your students also coming in, we can invite Tom sometime. I think you need to come back to India again maybe, and then we can organize some sort of a, with a proper audience of that real estate player about that green bond with the NAREDCO combining there. Because so this is the type of an innovative financing instrument which we should try and see how we can popularize this type of an instrument there.
Because
Because
it's very popular. It's popular now. There is GIZ, which is also bringing green bonds. They've funded a lot of housing finance companies.
Correct, sir.
And they have given money through green bonds. Essentially, IFC Washington also in India is very active in green bonds. So they have a certain set of criteria for the housing company to sort of follow, and then the money can go in to those. So अभी क्या हुआ, institutional lending हुई है. You have
ये तो खाली commercial projects के लिए हो सकता है. So
residential and commercial both.
How it residential? How this is what the Tom I was trying to understand. If you can just
If you have
how
a
the
LEED
green
platinum.
bond structure can work with the residential structure,
Yeah,
because
so-
some energy saving thing or
Yeah,
some.
so they have these certifications called LEED Platinum, LEED Gold, etc., which are very popular. And if the developer to whom the funding is being done follows and comes up to a certain LEED Platinum or criteria, then the green bonds are. So it's basically another mechanism of finance. You don't get a, I don't know, there's a 0.5% or 50 basis points cheaper, but I think these bonds are very competitively priced. So it's not cheaper money. At least GIZ doesn't have, or IFC is not cheap, but it's money is available. They have quite a few, sir. In PNB HFL, I know about 30 odd developers, and they have a criteria to monitor whether these developers are following green practices or not. So it's a mechanism which is now touched only at the first level, but I think at the developer level it should start coming in.
I think so that more awareness need to be created about that.
that.
Since I being into the finance market, I was not so much glued that how much of interest is there. So I think so the time is running out, and I thank each and every panelist out here who has taken time out of their busy schedule, and Tom, especially thanks to you that you have taken time and come all the way from Luxembourg to explain the concept, and we really value whatever the value addition that you have brought on the table and with the experience there. I think so there is much to be taken forward from there, and we would like to learn more from you with this experience there. Sunil sir, your experience is extremely valuable. Your hands-on experience was clearly visible, which every statement that you have spoken about it. Thank you, sir, for coming and spending time with us. Singh sir, I think so you have really handled all the developer issues with all the builder issues and all the futures and all the government policies and the initiatives which the government has taken. You have extremely narrated those incidents well, and also the future that lies hold for all of us as a real estate player, sir. Thank you so much for being so much optimistic about the industry and with the coming out too. Now, I thank all the audiences all here who have been all the patient audience and everything. Thank you so much, and now hand it over to the organizer for everything. Thank you, sir, for everything, sir. Let's give it a clap in your hand with it. Thank you, sir.